Bitcoin has been trapped between $60,000 and $76,000 for nearly 2 months. Buyers have tested the top of that range 5 times, and 5 times sellers have forced them back. The structural low at the bottom has not been challenged once. That imbalance is telling a story. In today's Bitcoin weekly analysis, you will discover that after nearly 2 months of compressed price action, the market structure is beginning to reveal its hand. The dominant range is intact, but the behavior within it is shifting. By the end of this analysis, you will understand the higher timeframe market structure, the critical price zones, what volatility is telling us, and the 3 scenarios that will define which direction Bitcoin breaks from here. Welcome back. We are Bitcoin Capital Gold. A global financial reset is quietly unfolding. Governments and major institutions are positioning for a future where Bitcoin and gold replace the current fiat system. This channel covers just these 2 assets and nothing else. Using macro analysis and structured technical analysis, we help you make more informed decisions in investing or trading in either Bitcoin or gold. If this sounds like what you want to know, please consider subscribing to this channel. Let's start with a high-level view of market structure across the higher timeframes. On the yearly chart, the trend is up. The last structural swing low sits at $15,479 from 21st November 2022. Until that level is broken, the yearly uptrend remains structurally intact. On the monthly chart, the trend is undecided. Once the 7th April 2025 low of $74,393 was broken, there is no definitive monthly trend. The monthly structure is in a state of transition, neither confirmed up nor confirmed down. On the weekly chart, the trend is clearly down. The last structural weekly high sits at $99,000 from 4th December 2025, and the current structural low at $60,000. Until either of those levels breaks, Bitcoin is working within this price barrier. On the daily swing chart, the structure is also undecided. Buyers were forming an uptrend, but the swing low of 14th March 2026 was broken, which removed that structure. There is currently no confirmed daily trend. Turning to Bitcoin's price action, we dig deeper. Since 5th February, Bitcoin has been held within what we call the dominant range, defined by the high on 5th February 2026 at $73,168 and the low on 6th February at $60,000. The equilibrium of this range, the balance point between buyers and sellers, sits rounded to $66,500. Bitcoin is currently trading below that level at around $69,000. Unless buyers can show conviction and push a close above $76,000, Bitcoin remains vulnerable to the downside. The structural low at $60,000 has not been challenged, and that in itself is worth noting. The high, however, has been violated on 5 separate occasions. Only 2 bars on 16th March at $74,935 and 17th March at $75,954 managed to close above the dominant range high. Both were short-lived. Price returned back into the range on both occasions. Every time buyers attempt to push higher, sellers are present to push them back down. That pattern tells us buyers do not yet have the strength or conviction to sustain a break above. On the daily swing structure, a lower high has formed from the 25th March top. All price needs to do now is take out the low of 22nd March at $67,387, and that opens up the probability of challenging all subsequent previous lows, continuing to assert a downward bias. Week 12 ended on its lows. This week, Week 13, as of Thursday, is also trading on its weekly lows. That sequential pattern of weeks closing and trading at their lows is not something to overlook. The Fibonacci zones are telling us a great deal. We are currently in a tight range from $63,000 to $76,000, a $13,000 range. On the upside, the Fibonacci resistance zone sits between $74,444 and $76,039. This was tested on Monday 16th and Tuesday 17th March, but the long upper wicks on both bars tell the story. Sellers rejected the move and pushed price back down on both occasions. On the downside, the Fibonacci support zone sits between $63,348 and $63,988. Price has not yet tested this zone. If sellers are able to break through and close below it, the door opens to finally challenge the structural low at $60,000. For now, the current price continues to sit between the two zones, treading water. Now, here's where it gets interesting. On the higher time frame Fibonacci picture, two levels are worth noting. Taking the COVID low of $3,718 on 14th March 2020 to the all-time high of $125,761 on 6th October 2025, the 50% retracement level comes in at approximately $65,000. Taking the 2024 yearly low of $49,351 to the same all-time high, the Fibonacci level comes in at approximately $65,500. This narrow band between $65,000 and $65,500, sitting just above the structural low of $60,000, is currently holding the weight of Bitcoin's structure. It is a significant confluence zone. Volatility can be summarized in one word: compression. The monthly ranges tell the story most clearly. January produced a range of $22,222, February contracted to $19,344, and March so far stands at $10,805 with 1 week still to close. 3 consecutive months of declining ranges. Weekly ranges are holding around $855, consistent but without directional expansion. The weekly close-to-open data is inconsistent, producing indecision rather than momentum in either direction. Volatility is telling us Bitcoin is still in a compression phase. The market is not yet trending strongly in either direction. It is building pressure inside a well-defined structure, and eventually that pressure will resolve into a directional move. From a macro perspective, indecision is the defining theme across markets. Equities are slowly breaking down as structural lows are tested. Light sweet crude oil is hovering around $93, approximately $7 below the psychological 100 level. The dollar index is finding support above $99, and that could be a bad signal for Bitcoin given its negative correlation. Any rises above $100 could trigger selling in Bitcoin. Bond yields are rising as bonds fall. The Federal Reserve's next move is uncertain. Weeks ago, the market was pricing in several rate cuts. Now, a spike in inflation has raised the possibility of rate rises instead. That reversal in expectations is itself a source of instability. After the initial conflict between the US, Israel, and Iran, markets are now waiting to see whether a ceasefire materializes. To a large extent, many markets remain frozen. That state of suspension cannot last indefinitely, and when it breaks, it has the potential to produce significant moves across multiple asset classes, including Bitcoin. We have looked at market structure, price action, price zones, volatility, and the macro environment. Here is how this can play out. Scenario 1. Buyers push price higher. Until price closes above $75,500, there are not enough buyers with conviction to push this market higher. A sustained close above that level is the minimum requirement for an upside case to develop. Scenario 2. Range continuation. For almost 2 months, Bitcoin has been patiently trading between $63,000 and $76,000. Bitcoin and most markets are waiting for a catalyst, a ceasefire resolution, a Federal Reserve announcement, or a shift in the macro picture. That could be the trigger. Until it arrives, the range continues. Scenario 3. Support failure. The critical level for Bitcoin to hold is $60,000. Sellers first need to test and close below the Fibonacci support zone between $63,387 and $63,988. That opens the door to finally challenge the structural low at $60,000, a level that is held for nearly 2 months. Here are your key takeaways. Bitcoin remains locked inside its dominant range between $60,000 and $76,000, a structure that is held for nearly 2 months. The equilibrium of that range is $66,500. This is the balance point. Every attempt by buyers to push above the dominant range high has been rejected. Volatility is compressed and pressure is building. The line of least resistance points downward. Higher timeframe Fibonacci support sits just above $60,000, but a break and sustained close below that structural low would represent a major structural event with the potential to trigger strong selling. The line of least resistance right now points in this direction. Every day, we publish a simplified market structure briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets. They are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is built to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.